tuning into this earnings interaction with the one IT company which is consistently delivering quarter after quarter. And as I read Sanjay Jalona's tweet last night, it's yes, of course, it's a 9.2% quarter-on-quarter revenue growth, but it's the best ever quarterly growth since their IPO. He must be a happy man. The question is, can the happiness continue? Let's get him and ask him this question. Sanjay, great having you, and congratulations on a good quarter. Hope all is safe.
Everything is well. Thanks, Neeraj, and thanks for having us.
Pleasure is ours. Sanjay, I was doing this math and I said this in my trade setup that in 9 months, you've grown 25% on a back of a year wherein you had grown 14%. So it is not the base effect, but this 9.2% is very strong. What's led to this?
I think, as we have been saying, the world over, the demand for digitization, automation has really expedited, with the world operating very differently from what we had seen ever since we were born. And there are three factors that really applied. One, what we call is great restructuring, where the future of work, workplaces, workforce, everything has changed. Every industry, every company, every country is not isolated from it, right? Everyone has to adapt and operate in the new normal. That is what is great. And the only thing which has been a savior has been the technology. That, if you were to ask me 30 years back when I started, or 35 years back when I started my career, that the world will operate and grow in this way, tech companies will grow, I would have said, it's never going to happen. But, the last 2.5 years has been tremendous learning for all of us, because the world had operated seamlessly, grown seamlessly. It's in a wonderful way. And technology has been a savior. And that's what gives a lot of opportunities in this field. Second reason has been the global, great resignation or FIRE, financial independence, retire early phenomenon that we have seen as people have chosen different lifestyles. There are more jobs openings than people available in the US market, as in 10.5 versus 7.5 million people, and those 7.5 million people are all making a choice of not going to work, right? Because they're making lifestyle choices. So there is a tremendous opportunity. Customers are facing double-digit attritions, and they haven't dealt with something like that. So that's why you see every company offshoring ratios have gone up, because the salary prices are going up, because the supply is constrained in the US. Customers have a lot to do for these digital transformations because they need to operate in the new normal. And that's what gives to higher work, because you can deliver a lot more at a better price points from offshore. These are the things which are creating a demand. And if you focus on fewer verticals, if you invest in technology, I think, that rigor is probably what is the wind behind our sails, so to speak, in creating this effect right now.
When you say that in the press release that you continue to have incredible conversations on the transformational journeys, suffice to say, I know the last time you had said, you had given me an example of this logistics company which is talking to you for trucking businesses, and you told me that it's too far to look at 5 years out, but 3 years out, you're seeing this growth continue. I don't think the conversation or your belief has changed about that, right?
Absolutely not. I think there is a lot of work to be done. Work is nowhere concluded. And despite, Omicron challenges, despite challenges of high inflation, despite challenges of, supply chain constraints, where semiconductors, for example, are not available and car prices are just shooting up like anywhere in all geographies, we are still grown, right? The demand has not changed. So while we need to be watchful on all these macro and micro effects that could happen, but if you have the right conversations, if you know the verticals that you operate in, and you have the discussions with customer how they can be more effective in the new ways of doing business, I think there is incredible opportunity that lies for us.
Awesome. BFS did well this quarter yet again. Can you talk about the move there, logos, deal wins, what have you?
BFS has been a great story. We, especially when we did our analyst day in December, we called out a section because people normally associate it with one large account for us. But this has been a story where these guys have been on steroids, not only in North America, but in Europe, in Asia Pacific, and so on and so forth. Like the kind of capabilities from doing most of the work in GRC area, we today make an impact on the investment side, corporate bank side, retail bank side, asset management side. It's phenomenal. Obviously, maybe, with zero capabilities in core banking 6 years back to being the partner of the year for Temenos and having a strong, ability to transform customers' businesses core, digitizing their core with the core banking platform. In these times, these are important initiatives that banks typically take. Data, for example, data work that we do in the banking is really, really superior. Uh, you know, Being the data partner for multiple customers, not in banking, one CPG customer actually selected us this year, this month. It's just phenomenal opportunity that we are seeing ourselves in our way in data, even in banking. So these are the things which are driving growth.
Sanjay, just wondering, I mean, is it the number of logos expanding which is leading to BFS doing what it is doing, or are you seeing the bank CEOs having some radically different conversations with you about newer lines which they would not have thought of, maybe you wouldn't have thought of 3 years ago?
Both of them. So we did not have we have opening logos, Fortune 500 logos in banks. Second, third, fourth, fifth accounts in North America have grown from literally nothing in the last 3 years to, driving up, really become growth drivers for the company. We opened probably this quarter another large logo, which will drive the growth for us in Europe. We opened a logo in Australia, which will drive the growth. If you really step back, this year, in the year to date, 1 quarter still to go, we have opened more logos than any time since we went public. And typically in COVID time, everyone said large companies will do well because they have incumbency. I think the sourcing has changed from scale to expertise. If you have expertise, you can actually break open any account. And that's what we have seen, both in existing accounts going into new cost centers and in opening new accounts with the value proposition that they were not getting probably from their incumbents.
Yeah, you fast becoming a very large company yourself, Sanjay. So you'll have to contend with that problem on the other side very soon.
All at heart, we're much smaller.
Yeah, still okay. One more positive before I talk about maybe not a couple of concerns, just one concern, but one more positive. The margin picture looks solid. Last time around, you told me that you want to be identified as a growth company and you would want to stick to these levels. Anything excess, you will put back to growth. Is that the motto still?
That's right. We'll continue doing that because we are a growth company. It helps in many ways. It creates excitement with our employees and customers both. It allows us to build capabilities. It gives opportunities to our employees to do things in a growing company. You always do more than what you came to do, right? What you are hired for. And that's what people see as enrichment of their careers. So we really want to drive that because it helps both business and employees.
But you would be able to maintain this as well. Sorry, I cut you.
That's right. We will keep the margin in the narrow band of 14 to 15 and keep plowing back whatever excess and back into business.
Okay. Just one quick word, two concerns, if you will. One, and not concerns really, but just wondering if it's seasonal, because both high tech and media and insurance, compared to reasonably strong growth in Q2, the rates have come off. A word there, and a word on attrition. A lot of your peers, your size, larger, smaller, what have you, have all said that they're seeing signs of it peaking out in this quarter. Are you seeing that as well?
So let me answer first high tech and media and entertainment. 1 quarter doesn't make anything. Look at the year-on-year number, 44% year-on-year growth on high tech and media and entertainment. We are super excited about this vertical. Insurance, and I've always said this has been a laggard for the company. Even when we grew last quarter at 6%, I had called out, 1 quarter doesn't make, everything right. So there's a lot of work still to be done. We have new leadership. They are putting teams, value propositions, the dialogue are very encouraging, but it will take some time.
Fair call. And attrition?
Attrition, that's right. Attrition, typically what we report is LTM basis, right? But if you do quarterly annualized, attrition for us also has dropped a little bit. just assume that it's stable. A lot of people will call it out as peaking. I have a different theory. My theory is in Q3, there are lots of holidays, Diwali to Christmas to New Year. I think companies go a little slow and a lot of people take holidays. So the hiring cycle typically slows down a little bit. Second thing happened, which was Omicron, really pushed up. When in a world event like that happens, or any event like that happens in a geography, typically everybody clamps down to say you should stay where you are, right? Because it's a secured haven, right? So nobody gets very adventurous to find new opportunities. So my belief is it's good. I think it's positive. Supply is also, everyone is focusing on supply, but it's too early to call it a trend. We have also seen it the plateauing out. I'm not calling it because I don't have enough data point. I'll have data point after 2 quarters to say whether it's really plateaued out.
Okay, fair call. We'll talk in July for this. One last question, Sanjay, because I understand you are running short of time. In the analyst day that you spoke about, unless I'm wrong, you made a reference to how the size of the deals is getting altered, and the larger deals are not as thick as they used to be in terms of the intake. Why do you reckon it's happening? And just a follow up to that. Actually, just answer this, and then maybe if I have a follow up, I'll ask.
That's good. Look, what is a large deal? Large deal typically happens when a customer is outsourcing their infrastructure, applications landscape, or say ERP rollouts. Three easy examples to understand where the scope is very clearly defined. It could be done by incumbent service provider, or it could be done by internal employees of the customer. But the important part is scope is very clearly defined, and it's typically support maintenance kind of stuff. What is happening in the world? All the focus is in digital transformation. Nobody is focusing on this maintain business of how do I reduce the cost to run. That is not a priority. Every CEO, every board is asking the company, how are you going to operate in the new world where people are operating very differently? I have 45,000 employees and 45,000 offices, literally, right? If I were to exaggerate the thing, right? Now, when the focus is on digital transformation, companies wanting to spend a lot more money, the focus is not on large deal overall, right? And I think that is what is happening. It will come sometime when this tapers down a little bit, then this will push up a little bit. But right now the priority, and there's so much work to be done in digital transformation, that's why the nature of demand has shifted to these small bespoke change kind of projects for the companies.
Lovely. Just to get this clarity before we thank you, Sanjay, would that mean therefore that these kind of opportunities may not be large in terms of the volume as well, and may not be long in terms of the tenor as well? You get it, and maybe you finish it within a 12-month period, and then it gets renewed, stuff like that?
Absolutely right. And lots of things in, say, banking, high tech, which seriously ramp up quickly. It comes in, you have a pod of 10 people. You suddenly say, okay, I have another thing. Why don't you add 10 more people to that pod? So it's not even a bid cycle at times, right? So where you can actually, it's a lot of things that don't even coming in pipeline. So this is the changing nature, because it's change where everything is, the scope is not clearly defined, where you're co-creating with the customer. That's what leads to this nature of business.
It must be the most exciting time to be the CEO of an IT company, Sanjay. But you're doing a fabulous job. Keep it up. And thank you so much for speaking to us today.
Thank you for having us, Neeraj.
It was ours, and viewers, thanks for tuning in.